Hello, everyone. This is AJ with FBS Securities. I just wanted to make a brief video covering this structured note income fund as well as go over some details. Yeah, I'll get right into it. So our partners at iCapital have actually launched the first structured note income fund. And from an income perspective, this is a very appealing offer compared to the other current income generating products. Specifically, if you're looking at bonds, real estate, etc. The current yield that is being indicated is a very attractive option, and of course, I'll go over the risks, as well as how it's mitigated and how it's a really appealing investment for the structured note income fund. So first and foremost, this information is for educational and informational purposes only, should not be considered investment or financial advice. So with any structured note investments, there are five main risks associated with those notes. The first risk is the market risk. The second one is the early redemption or the callable risk. It is, of course, a lot more complex in nature, but I would suggest that if you haven't watched the previous video I have just on income notes, I'd really suggest going over that video because I won't be covering too much in detail about what a structured note is. I'm just going to be talking about the fund structure and some of the elements for that. So I really would suggest you to watch that video. And then, of course, there is liquidity risk and then the issuer risk as well. So I really like showing this graph because it kind of shows you an illustration of the current yield, from a risk to return perspective. Of course, the more risk you take, the higher the return will be. But specifically for anything on the income side, if you're looking at cash, bonds, real estate, they're sitting somewhere around here. And with this structured note income fund, it's maybe sitting a little bit higher, right? Because you're taking a little bit extra risk, but the return is also pretty elevated at that point as well. So specifically for the fund right now, the current indicated yield is anywhere from 13.4 to 15.4%, just based off the average weighted coupons. I will have more details in a couple of weeks once it's closer to the trade deadline. But for right now, this fund is investing into 14 different structured notes, and each note has three different S&P 100 companies. And so the reason they're using S&P 100 companies, again, they're the largest companies by market cap, so a lot more stable than say compared to mid cap, small caps, etc. And so each note has a call or the coupon frequency would be on a monthly basis if all of the conditions are met. And there is a 50% soft principal risk and a 50% coupon risk, which basically means for each individual note, as long as the worst performing stock is not below 50% for that month, you will receive the coupon payment for that month. Now, in the instance of, that you miss a coupon payment, which again, I would expect to miss a couple of coupon payments just because stocks are a little bit more volatile. There is this feature called memory, which basically means that if you do miss a coupon payment and then the underlying does go back above the threshold level, you will receive any missed coupon payments for that particular note, right? I'll cover a little bit more detail what I mean on the next slide. But that's a really good feature to have, especially when you're using individual stocks. So the term for each note is a 5-year term. However, after 6 months, they are callable on a quarterly basis. So what's the good thing with the callable feature is that the money doesn't get reinvested. You will actually return that principal back along with hopefully any of the coupon payments. And I'll cover that on the next slide as well. And lastly, it does have a daily liquidity available based off the net asset value, and the liquidity is also provided from the callable feature that each note has. So you can invest in this note through individual account, joint, IRAs, Roths, trusts, LLCs, etc. So it doesn't have to be just your taxable account. So these are the 14 different notes that will be invested for this fund. So for example, if you did a 100K investment, there are these three notes that are weighted at 15% each. So out of that 100K, 15K would go into each of these three notes. And then the other 11 notes will all be invested at 5K. So now on a monthly basis, we're looking at the terms and conditions for each individual note separately. They're not combined. Right. So for example, let's say this specific note, that target was below that minus 50% mark at the on the monthly basis, then you would not receive the coupon just for this particular note. However, if every other note does not breach that mark, then you will receive the coupons for each individual note, right? It's not that, if this is missed, then you miss every single one. No, it's only per individual note, which is a really good, diversification method at that. And so, just for clarification, this is basically a point-to-point system. So let's say, for example, this note trades or this fund will close September 1st, right? So at the beginning of each month, say October 1st, November 1st, etc., the you will look to see where that underlying is based off that initial start point of September 1st. That initial start point will never change throughout the terms of the entire note. And this will also be applicable for the principal protection as well, of course, as the monthly coupon protection. So it doesn't change per month. It is the exact same start date for the rest of the life cycle. And so it's very easy to sort of track and kind of keep, pay attention to. So, yeah, I just wanted to show at least the underlying holdings. And then again, these are all S&P 100 companies, so the largest 100 companies based off market cap. And then, why is this fund or why is this fund attractive? So with the current interest rate environment, I believe Feds will look to cut interest rates again within within 2025 and possibly to 2026. This will decrease the yield that the bonds are paying right now, right? So your yield becomes less. And of course, right now, real estate has been struggling, just with the cap rates and cash on cash with the higher interest rate environments for the borrowing side. A lot of these deals just has not been making sense. So you're looking at anywhere, again, right now, the indicated value is say 13 to 15%, which is very high and attractive yield, specifically just looking at income products right now. And another attractive reason is this note does have that elements of liquidity, whether it's a callable feature or the daily net asset value, if you did need to pull the money. So the callable feature, again, like I said, let's say this Note 5 was called after 6 months, you would receive this 5K principal back as well as hopefully you would have collected the coupon payments as well, right? The other 95K will still be continued to invest. And I would anticipate maybe more than half these notes to be called back after a couple of years. So at least you're getting that element of, you're getting your principal back and the rest of the notes will still kind of do their work, so on and so forth. So that's a pretty good feature that they have. And, I like that sort of callable feature as well. And then last but not least, again, like I said, this note is well diversified into 14, or this fund rather is diversified into 14 different notes. And then I believe each note will be issued by a different bank. So you're not only diversified through notes or the individual stocks, you're also diversified through different banks. So you're mitigating that credit risk as well. And then, of course, lastly, you are looking at the largest S&P 100 companies, so a little bit more stable on that front when you're looking at the large cap companies. So yeah, that's all I have. If you do have any questions, then please feel free to reach out. If you are interested, just please let us know, and at least we can start opening the accounts and just answer any questions that you may have. That's all I have. Thank you so much.